Welcome back. Chris Temple here with you once more, and today I'm catching up with my old friend Des O'Kell. Des is the president. He's a co-founder as well, and on the board of directors of Enterprise Group. As you see here on the screen, they're listed on the Toronto Exchange under the symbol E, easy to remember, and here in the U.S. on the OTCQB under the symbol ETOLF. Enterprise Group is a company that I've known for a decade plus at this point. Good times, bad times, and good times again. They're one of the better, more solid stories in energy services, chiefly serving natural gas liquids producers, a little bit of oil, I think, in there too, in Western Canada. Now, before I bring Des on, a reminder that he and/or myself might be making what are construed as forward-looking statements, so we want to let you know about that. That said, this has been one of the more satisfying small cap stocks on our list over the last few years. As you see here, the share price is up several times from its low in the worst days of the oil patch and energy sector in Canada. And the good reason for that is this next chart that you see here from their latest corporate presentation, recapping how they've really gone from rags to riches, so to speak, operationally. You know, they lost 10 cents a share Canadian as recently as 2020. Last year, their net income was 12 cents a share, and they're, I think, on a pace to exceed that here in 2024 as well, as their business just keeps growing and growing and growing. And Des is going to get into the reason for that with me when I bring him on. Just a quick recap before I do that. Enterprise was featured in one of my more recent special issues on old energy. Here you see the cover on the screen. Kudos as always to my great cartoonist Jerry King for following my harebrained ideas and turning them into art. If you haven't seen that before and you're not on my mailing list, make sure that you get on my mailing list and I'll be happy to send you a copy of that. Enterprise is comprised of several subsidiaries. Essentially, as Des will remind us, they outfit from soup to nuts, basically, remote work sites, chiefly for the energy industry. So when you're out in the middle of nowhere in a prairie or someplace and you need to have essentially a small town or big camp, as the case may be, built, they provide everything from the buildings to the medical shacks, the offices, the lights, the infrastructure, the power, the whole 9 yards. And especially the power part of that has been the most explosive part of the company's story in the recent past, as you're going to be hearing. And I am joined by my old friend Des O'Kell, the president and co-founder of Enterprise Group. Des, good to see you.
Really good to see you, Chris. How are things?
Well, they're good, and it's a challenging time. We both have our respective political circuses in the U.S. and Canada. We'll talk a little bit about that toward the end when we look at the macro picture and how it affects energy and you specifically. But I'll tell you what, during a time, and I alluded to this before you came on, that a lot of really good, fundamentally sound, in my opinion at least, plays in small resource stocks, be they energy, be they metals or whatnot. You've really been one of the standout stories of the last few years, and it's a testimony to you and to your co-founder Len for being able to shepherd Enterprise through a lot of lean years, and now you're getting the benefits of that. So, last year is I'll show it here again. You guys have flipped from a 10 cent per share net loss to a 12 cent per share net gain in 2023. Those are in Canadian dollars, of course, Canadian figures. And, looks like things are continuing to ramp up. You had a good first quarter where you kept going in the right direction. I know that sometimes the summer months are a little bit lighter as far as business activity and whatnot before it picks up again later in the year. What do you see pretty much for the balance of 2024 operation wise?
Yeah, well, the if you can start looking forward to the back half of the year, there's no doubt the our clients, the producers, their programs for the remainder of the year seem robust. I don't think there's any worry about the activity levels. I think the trajectory we're in is still intact. You make a point about the soft Q2 quarter. I mean, Q2 is we're operating in northern Canada, and let's face it, when you go from frozen, very competent, hard ground, and you start the thaw, which is usually confined to the months of April and May, that's when you get some out in the frontier. The ground competency starts to thaw, and moving heavy equipment around is tough. So nothing stops, but there are some areas that are tough to move around. So activity levels in Q2 in our energy sector, it is a bit of a softer quarter, but Q3 and 4 are excellent quarters. Once things dry up and the ground is competent again, activity levels happen. But there's no doubt that some of those frontier areas where you absolutely need the ground to be frozen, that obviously is Q1. That's why Q1 is in the calendar, it is the strongest, but Q3 and Q4 are also very good quarters.
Right. Well, and you guys announced, and you've told me this before when we've spoken a couple times in the recent past, and in the written information I put out on Enterprise in our energy special issue several weeks back, that you've seen in the recent past more spending on the part of your own clients. The companies that you serve, they had their heads down for a long time up there as well. But bit by bit, they've been getting more aggressive. Things have turned a lot, have a lot more bullish tenor up there. In May, you announced another tier one client that you brought on board. And I don't know if they're represented here or not, but I'll share your most recent roster that you have in your deck of your biggest clients. But that's a who's who of all the big names, or most of them, in the Canadian oil and gas patch. And it's a nice place for you to be and to be able to serve these kind of companies. And in some cases, especially with your Evolution Power projects, which we'll dive back into a little bit, you don't really have a whole lot of competition. You outlasted it all, or you've kind of gone beyond them. So that's a good thing.
Yeah, in some of the equipment classes that we have and developed, we have competition in what we're going to talk about in our the Evolution Power projects and the methods, the transition from diesel fuel to natural gas. Those methods of mobile power systems for these project sites, we are at the moment the only one offering these low emission site electrification methods. And we have this leadership position. It's driving not only growth, but our CapEx spend, and it's we're in a good spot positionally. It's tremendous.
Well, and for folks out there who aren't familiar with these kind of setups, and working in remote areas, you're out in the middle, what most people would consider the middle of nowhere, what you might consider the middle of nowhere, up in the upper parts of Alberta or BC, as the case may be. And there's nothing there except resources. Well, how do you get them? And one of the first things you have to do is you basically set up, in some cases, the equivalent of a small town. So you can bring in workers and equipment and stuff like that. And you handle a lot of that infrastructure, as far as the buildings, the medic shacks, offices, places for people to sleep and whatnot. They all need light. They all need power. They all need heat. Maybe for a short, 5 minutes in the summer, they might need cooling here and there too. I know it got hot up in your neck of the woods too recently. But by and large, all of that power in the past, and anybody who has ever been on these kind of excursions like I have has seen it. You got a whole series of smelly diesel generators that stink, they're noisy, they burn a lot of money, they're not the best thing for the environment. And you guys have come up via your most recent big subsidiary, which is now, I think, your lead story, to be fair, Evolution Power Projects. You've completely transformed the way in which these remote camps operate because you've changed the fuel. So tell us how you came about to have that. I don't know if it's still a subsidiary of Enterprise,
Yeah,
right? But
yeah, it
what
is.
gave rise to that? I mean, obviously, looking at it now, it all makes sense. It's benefiting everybody. But give us a quick little history of that, Des.
Yeah. Well, there was an opportunity, and we started this retooling of our mobile power fleet. Up to 5 years ago, we started this developing this method. Now, traditionally, diesel has been an excellent medium for these remote areas and so forth. But that's over decades. We're in a spot now where let's just back up and talk about what a site, if they're drilling and fracking and completing and doing their water transfer projects or building a plant in the gathering systems that are very remote. This is where we bring out this site infrastructure so they can operate 24/7 at all times of the year. Traditionally, you have multiple diesel generators on site. Every light tower that's out there, and these are 5 to 15 acre sites, so you need a lot of lighting, and we have these. We call them stadium light towers at the bottom of every light tower, and you may need 6 to 16 of these light towers on a particular site. There's a 6 to 20 kilowatt diesel generator at the bottom of every light tower. So you have multiple of those on site. Then you need to power the buildings and any other ancillary power needs that the client has. You'll have 100, 150 kilowatt diesel generators that are powering the buildings and the offices and command centers and so forth. So there's a great deal of diesel being consumed in a day. Like, we're talking in the few thousands of gallons a day. So it's a serious cost to the client. So we started looking at some alternatives. There's natural gas generation. It's been around for decades, but we started to pin down to be a big part of our fleet are these microturbines, turbines that operate on natural gas because they're not a reciprocal engine. They don't require the maintenance intervals just like your reciprocal engine in your car. These diesel engines need to be, between 550 and 650 hours. They need fluid and filter changes. Well, you got to stop the unit, and those are downtime. These micro turbines, we'll put them on site. We'll turn them on, and they're absolutely rock solid, all the way down to minus 40 degrees C. And of course, the particular unit that we are building our fleet around has tremendous fuel tolerance. And because most of the sites we're on, we're utilizing the client's natural gas that they're producing on site or nearby, which completely eliminates their expense to a fuel distributor, which is a big savings. We get this one unit drops the volume, and of course, we got the biggest benefit out of that is not only cost but emissions reduction. So we started to retool our mobile fleet. We still have a diesel fleet. We are building our natural gas fleet because it's now in demand. And of course, up here in Western Canada, in our energy services business, we're the only one at the moment that is offering this class of equipment and this method of electrification on site. So when we get the attention of many of the decision makers, cost reductions, emission reductions, simplification. We dropped this one natural gas unit on site. We have a microgrid that goes around the outside of the site, and all of the infrastructure seamlessly plugs into the microgrid. So it's a very efficient and these microturbines that we are building our fleet upon, they're very advanced. We see remotely. We have connectivity with the units in the field. So our field techs back at the yard and shop can see on a dashboard the performance of the units at any given time in real time. And not only that, they're scalable. We can take 1 or 2 units or 10 and basically run them in parallel. We cable them up connectivity, and we can have, if we need 1.3 megawatts, we'll just add the units to make up that demand, and it operates as a singular power plant, even though we're scaling them 2 together, 4 together, 10, so on. So very, very desirable units in this fleet.
That's neat. So the costs have collapsed for companies using this compared to what they used to have to spend for a few thousand gallons of diesel every day.
Yeah.
And so you've got that, you've got less noise and all the rest. And of course, we don't need to get into all the minutia of it, but with the federal government, especially with their regulations as far as the level of emissions, what penalties and or benefits there are based on emission reduction, you're helping a lot of your clients meet some of these mandated targets too.
Yeah. Here in Canada, we do have they've nicknamed it the Heavy Emitter Act, and it's not just the oil and gas industry. It's industry wide. You could be a cement manufacturer, you could be a Ford Canada building cars, or any of our tier one clients. If you're producing a level of CO2 in your scope of activities, you're caught in this legislative obligation of tracking and reporting your emissions. And then, of course, they have these thresholds that over time will compress. Right now, all of our tier one energy producers are caught in this because the level is 10 kilotons of CO2 equivalent. So most of the tier one clients of ours are caught in this legislative scheme. So not only do we have the ESG, which is more of an elective code or scorecard. This is mandatory because it's legislation. So
Right.
as we move into the future, that threshold will start to compress, and then it won't just be the tier one players. It'll the mid-sized players, and then eventually the small players will all be caught in this particular scheme, the legislative scheme.
Well, which all of which means increasingly they're going to need you to help them get under those limits.
Well, certainly what we're offering in that scope of their business, we offer these emissions reductions that come along with some very, very tidy fuel cost reductions as well.
Nice. There's a couple other things I want to talk about before we kind of go into the macro situation. One is that not only are these tier one energy clients that you presently serve and others like it fair game, but you've told me otherwise recently that you're now looking at other types of companies that have to use remote camps as well, whether it's for construction, whether it's mining, exploration
Hmm.
activity, and that kind of thing. So you may be able to expand your footprint by going into these other industries now with your Evolution Power Projects subsidiary.
Yeah, I mean, having mobile, microgrid systems that are everything's mobile and can be deployed quickly. There's some adjacent industries that are hand to glove for this type of mobile power. We have talked about the mining industry. I had a nice conversation. We were introduced to some serious leaders in worldwide mining, and they're not aware of this type of mobile power. So we're gonna introduce to some of these mining leaders that we got introduced here to this week, and we're gonna explore the mining industry both at the build and the operational stage. Obviously, they suffer from the same things. These sites in energy or oil and gas extraction, they're remote, right? There's no infrastructure, and you got to basically bring it in and assemble it for long-term use and project sites. So there's the mining industry. There's the construction industry that is happening away from, or there's no overhead power and what have you. There's no infrastructure. There's tremendous opportunities in away from grid construction. We've already done a couple of those projects, and they fit absolutely into our model. There's temporary and emergency power response because we're picking up when we go to a client site. We're picking up and mobilizing, and we're heading out to site that could be in these very remote areas. We can be there and set up and delivering power inside of 36 hours. So the temporary or emergency power response is also an adjacent industry that we can fit this into very, very easily. So there are bigger expanses than just the energy sector here in Western Canada.
Nice. Well, and back to closer to home again. You announced this last spring a big deal, I think, with the collaboration with the business entity for the Treaty 8 First Nations. Tell us a little bit about that and how that is giving you an opportunity to expand as well.
Yeah. Well, again, some of in these regions here in Western Canada, Treaty 8 is quite a large geographical area. It sort of straddles northeastern BC and northwestern Alberta, comes south quite a bit under Grand Prairie. What's happening is and there might be a little bit of a misunderstanding. Everybody may get a message that all First Nations are against resource development and what have you in their areas and what have you. Actually, it's quite the opposite. It's very few are against it because many of the First Nations citizens and personnel and the folks involved in those communities, they're working in these in forestry, oil and gas, and mining and what have you. What was the disputes and what have you were that they were sometimes on the outside of the economics of it or the decision making and so forth. So we had a very interesting decision in the Supreme Court of BC, British Columbia, almost 3 years ago now. A decision that was on the side of one of the First Nations that was taking this dispute to the Supreme Court. And because of that decision, there was a year and a half of dispute resolution between the government, the First Nations, and industry. And what happened was it took a year and a half, but the settlement came January of 2023. So now a year and a half it's been settled. And there was drilling and development moratoriums that happened for a year and a half before that decision, or that settlement. But that settlement now is in play. And the First Nations groups are not only involved in the decision making of permitting and land use and what have you, they're now involved in the economics. So everybody now is sitting at the table. Like Mike Rose from Tourmaline, Canada's largest natural gas producer, said, it's not business as usual, but all of the settlement metrics and what have you have been properly absorbed, and we're going to move along, and everybody's at the table. The First Nations groups are going to be involved both actively and economically. So everybody's now at the table, and there's room for everybody. What we have done is, I'll back up one step again, is that inside of that settlement, there actually is some requirement to utilize First Nations personnel and services. So many of these First Nations groups have development corporations, and those development corporations are involved in the industry. Physically in the industry of energy services and what have you. And that agreement that you saw in the news release was us doing a collaborative venture with that First Nations business, because the producing clients have to use a percentage of they have to give a certain percentage, and it's not a simple one. It's more in the 35-40% range to the First Nations businesses. So because we've collaborated with that First Nation group, and we have equipment offerings that are almost exclusive, they've partnered with us. So there's strong influence to use First Nations legislatively. So we're in that mix with that agreement. I hope that properly explains that, Chris.
It does, and so by virtue of the fact that you're collaborating, as you say, with them, that fulfills a requirement that they've got to have skin in the game. They've got to be a piece of the whatever development work and stuff is going on, and that's great. I mean, I saw recently, and I was just talking to somebody else about this not long before you and I got on here, Des. But there was just a public listing of a royalty company. This is more in metals, in British Columbia, on the part of, I think it was Nisa and one of the other First Nations there, that are both involved in this, but they're so involved now in having skin in the game and being a part of the whole thing that they've got a big investment fund, and now they're gonna, it used to be that you had to fight tooth and nail in the courts if you went on to First Nations territory to be able to do any exploration. Now we've come, well, maybe not full circle, but we've come a long way. And now some of these First Nations, besides, you getting to still, you still need the social license. Now they're looking at investing themselves in some of these things. Absolutely. It's pretty cool. That's pretty cool.
Yeah, it is. And, you mentioned the Niska, and that's a very forward-looking group. The Niska is also involved in the permitting and development of another LNG opportunity off the West Coast,
All right.
the Casino Sims LNG project, which is at a particular advanced stage of financial investment decision and permitting and what have you. So I expect that one as well to be one that will come to fruition here in the next few years as well. So a very, very forward-looking First Nation group looking at, and doing things responsibly and
Nice.
and benefiting their community through it.
Well, speaking of forward looking again a little bit, you guys raised some funds back in May to help augment.
March.
What's that?
Yeah, that was in March,
I'm
mid-March
sorry,
when that.
in
Yeah.
March. So you guys raised some funds back then, and you need to invest in more equipment because the demand is rising for what you're doing. So that's always a nice problem to have. And you also are on the hunt, I think, for some sensible and accretive acquisitions as you build the business back up to take advantage of this better environment in Canada, aren't you?
Yeah. I mean, this is Enterprise's 20th year in business. So we have been you can almost call us a serial acquirer. I mean, we've made 9 acquisitions. There's been some amalgamations and so forth. And we made 2 very, very timely and opportune dispositions during that slowdown in the energy sector that lasted 7 years. We let go of two of our underground specialized underground construction businesses for very, very opportune prices. And it allowed us to get through that very significant downturn and go net debt, positive or net debt free, if you want to call it that.
Right.
And it allowed us to retool our power fleet well before the uptick came. We started this in 2018 and 19. We didn't see the uptick till 2021. So while many of our peers and competitors in the energy services world were going out of business and folding and equipment going to auction and what have you, we were positioning ourselves for where we are today. I don't mind patting ourselves on the back. We have an extremely desirable team that works diligently, through those tough times of refining our business. And not many of our peers and competitors can say that they were cash flow positive through those poor 7 years. We were. And not only that, we were cash flow positive enough that we were able to buy back 20% of the company's shares in an issuer bid that started in 2018. And we bought back almost 11.5 million shares at a very, very low price while we were all out of favor. So we've done some good work in that time.
Well, and folks, what Des just told you is just one of the reasons why, despite or notwithstanding, I should say, the big move that enterprise shares have had from their bottom, this is still a very, very deep value play in my judgment because they've been able to buy back shares. And you guys, management, have a third or more of the shares that are outstanding that you own yourselves. You don't
Yeah,
see that every
we're just
day.
forward. Yeah, we're just forward to 35% ownership, management and directors. Yeah.
Yeah, you don't see that every day either. So this is still as good as things have been the last few years, and as nice a rebound as you've had. There's still, in my view, a lot more to come. A big part of that too, I think, as we start to wind down, is because apart from the Nisa project, the one LNG project that you talk about, that's in the planning stages, and one or two other ones, I think up there. The big one that is finishing construction is the big LNG Canada project. What's the price? Is
Mhm.
the price tag on that thing up to 40 billion yet, or something like that?
Oh, it's over that.
Over
It's
that now?
yeah, by miles and acres, it's Canada's largest ever capital project. So it's glad to say that the pipeline is finished. It's been finished for a few months. The liquefaction plant in Kitimat up on the northwest coast of British Columbia is just months away from being finished. They're looking at filling up the pipe with gas here in the coming months inside of 2024. And I believe they're aiming for early 2025 to start shipping cargo.
Start shipping.
So it's a big deal. a absolute needle mover for the Canadian energy sector and all Canadians. Let's face it. But this is our first foray into the global LNG market, and like you said, you mentioned there's another 3 other projects coming in behind it. The Haisla First Nation group, separate from the Niska group, they have their Cedar LNG that actually went to full final investment decision just 2 weeks ago, and they're paired up with Pembina Midstream, Pembina Pipelines and Midstream. So that one is also in play, and of course, another one is called Wood Fiber, and that's off just north of Vancouver. Wood Fiber is a Malaysian billionaire fella. He's got an LNG wood fiber that's been in operation off the west coast of Australia for the last several years. So he's in construction here as well. So that's a 4th one. He also owns the operating company that's a client of ours, Pacific Cambrian. So they're the production producer up in these areas that we're operating in, and of course, wood fiber is the LNG side of his business. So Canada's foray into the global LNG world is going to transform our sector, because both gas and oil, our only client for decades has been the U.S.
Right.
Now we get access to the Asian markets specifically. Of course, we had our TMX Trans Mountain expansion line, which is an oil line that tripled the volume to the West Coast, and all of that is going to go to offshore to Asian markets and other markets as well. So we're going to see less lumpiness in the Canadian energy sector with these 2 projects that are 40, 50-year projects, and having access to different clients. LNG Canada alone, the Shell project, will take away almost 15% of Canada's gas production. That one project alone.
Wow. And that underscores, folks, something I've said for a while, and that is that when we recently saw the spot price of natural gas back earlier, I think it was in the spring sometime, get down to a 30-year low or something like that. It was under $2 per MCF for a while. I think that's a generational buying opportunity. A lot of one-off things were baked into that price that I don't think are going to last. And the demand uptake is just going to be stratospheric. Here in the US, it was just official recently that natural gas now is the single biggest source for electricity generation, greater than coal, greater than oil. That trend is going to continue, I think. Up in Canada, I saw just this morning, Des, a piece in the Financial Post that Canada, which apparently needs to take its own house a little bit more seriously as well, is a net energy or net electricity, importer now. So I think you need a little bit more generation up there too, besides what's going to be sold abroad, and that should be that much more bullish long term for natural gas.
Yes, absolutely. Obviously, there's some shortcomings. I mean, we have some problems in some of the regions in Canada. It needs to get itself sorted out, and it all stems from very, very poor management at the government level.
Wow.
Here, it's just getting distracted with things like renewables, and in Ontario they sort of eliminated natural gas for electricity use in a previous provincial government, set themselves up for the situation they're in today. It's just terrible management. We don't have the exclusive on terrible government management here in Canada. You've got your
No, you
own
don't.
government. I
Not
think we're
hardly.
suffering in the whole G20. But we have to digest these people and purge them out, and we have to start getting down to some pragmatic approaches. You and I have talked a tiny bit about power demands. I mean, these data centers are absolute power hogs, but they're nothing like the power hogs of an AI data center, which the computational power that it requires is just it's mind blowing. And everything we do in life needs to plug in and needs electricity. Any advancement in technology and so forth is just more and more and more. So
Well,
electricity.
Another one of
Eh,
my recommendations, an oil company here in the U.S. Prairie Operating Company. They're focused in northern um, Colorado and that area, the Denver Julesburg Basin out there. Got some great projects out there. Hopefully, you're going to be in production here before too many more months go by. You know, a couple of their functions I've gone to, I love what they've said, and I've borrowed this phrase a number of times. A lot of the media and even the industry talks in terms of energy transition. What we really have happening globally is an energy addition every single year. The demand for all forms of energy, be it for fuel, transportation, electricity, whatever, it keeps rising every year. And as the world that isn't developed already develops further, that's only going to increase. And so it's a misnomer to think that, well, we're going to have some static energy mix. And if we add a little bit of solar and wind over here and maybe some nuclear energy, we're going to need the correspondingly less oil and coal and natural gas. Uh-uh. That's not the
Need them
story.
all.
Not far,
Need
far,
'em
far
all.
from it. And really, I think the best in all of that, although, you know, old energy, like I wrote in that recent issue of mine, is here to stay. Neither one of us is going to live to see any meaningful decline in the demand for certainly oil and gas, maybe coal a little bit more. Um, but as time goes on, I mean, these still are very great needed industries. You guys have enabled, especially with the natural gas sector in Canada, to make a difference globally because what you're going to export is going to be less expensive than what some of your customers might be buying or using right now. Natural gas, as we all know, is cleaner than burning oil or coal. You've proven it with your remote power stations as well on a small scale, and it's true on a big scale. So, you know, I'm
Mhm.
happy for you and Len that you weathered the storm, and now you've got this great, thriving, growing business that I think is only going to get better. So, not for the first time, Des, congratulations to both of you guys.
Well, thanks, and appreciate your recognition as well. But even in the like you've mentioned the dog days of those low days of that energy downturn that we were experiencing here in Canada. You and I still got on the phone, kept in touch, talked about not only the business and our economic landscape and so forth. We talked about all of the other things that go along with the financial markets and global energy and so forth. So appreciate the attention you've spent on us and keeping an eye on us.
Well, and likewise, and folks, again, if you've not taken a look at Enterprise before, here's the information again on the screen. Do your homework, reach out to the company, go through their website, pay attention to what we've had to say here today, because again, this is one of the better stories out there of anything I've covered in the recent past. And frankly, one of the things that I have in my energy issue. And as a reminder, if you didn't see it or you're not on my mailing list, shoot me an email and I'll be happy to send it to you so you'll learn more about the big picture of energy as well as enterprise specifically that way as well. But I really like the future story for Canadian energy specifically. You know, having lived almost my entire life, except for this last tenure where I finally did decide to move to Florida and be a full-time resident. And I'm a reverse snowbird. I try and go north a little bit in the summertime, but otherwise I live down here. But until I moved to Florida, I've been within a stone's throw of Canada my whole life where I live. Spent a lot of time in Canada, love the country, and of course, for very different mercenary reasons over the years, I would keep track of what the exchange rate was. And there would be a couple of times here and there where the Canadian currency, the loonie, as we all call it, was even more expensive than the US dollar. More recently, it's been quite the opposite of that. But especially if you're watching this and you're a US based investor, not only are Canadian energy companies, generally speaking, valued at somewhat less than their counterparts in the US. But if you're a US investor buying them in US dollars, and if I'm correct in that 2 to 3 years from now, the Canadian currency will be at parity again with the US dollar. Now, it's going to be Des, in my opinion, not so much because Canada's that much greater, but because there's a lot of reasons why the US is going to have to reduce interest rates and devalue, no matter what the underlying economy is doing. And that's going to bring the dollar down more. to keep the whole world liquid, keep the whole world from declining. So if I'm correct, and we see, plus with the resource stories coming, Canada being a more resource-based economy, there's more demand. We get the commodity currencies having a good day again. So the loonie, the Australian dollar, and so forth. If you're a U.S. investor, you're buying these companies, I'll oversimplify it, for a third off right now when you look at the currency differential. So that's going to be an added bonus to you, if besides the fact that you're looking at a really well-valued company here. So I know that you and I both have jaundiced views as of our respective governments, but thankfully, I don't know if they can get any worse, and we should start seeing some improvements.
Yeah, well, up here, what we're dealing with here in Canada is, it's now developed itself. Canada has seen enough of this prime minister that we've had here. It doesn't look at all even achievable. I mean, it is over a year away, our election. Anything can happen, but there's no doubt the absolute incompetence in the management of things. Corruption. I don't expect all Americans to know our headlines, but it's dreadful. Canadians have seen enough. It looks like they'll get an absolute shellacking, and then we can get down to the business of repairing what once was a thriving country with tremendous assets in resources and what have you, and get away from this constant kneecapping of the resource sector here in Canada. We're going to have to, as a country, rely on the revenues of the resource sector to repair this country's status, both economically and socially. So we're looking forward to that. I think we'll have a change in government, and upwards and forward.
Yeah, and the fact that you've been doing so well recently, despite these headwinds, things should only get better, we hope, down the road as well. So Des, thanks again. I'll look forward to the next time we can catch up and commiserate here.
Yeah, you bet. I really enjoy the time we spent together. Thanks.
Take care.
For much more of the National Investor's cutting-edge content and actionable investment opportunities, make sure to subscribe to Chris's free content at nationalinvestor.com. And don't forget to like this video and subscribe to this channel too. Thanks for tuning in, and we'll see you next time.